About to leave, already packing. Come with me, I'm not really asking. We'll get away to a place where we don't know. About to see the world in action, what we can be, life with no distractions. We'll get away, this is what we waited for. Take my hand, we'll make it somehow. We can't miss out. I'm done living life with the lights out. Die with my own doubts. Be free with me. Let's be free with Not looking back, eyes on the freeway, Bonnie and Clyde, a classic cliche. We're on the run, this is what we waited for. Take my hand, we'll make it somehow. We can't miss out. I'm done living life with the lights out. Die with my own doubts. Be free.
Good afternoon, everyone. It's Jim here. I tell you what, let me get the technology right here and assign Pete to the right window. There we go. Everyone was worried that it was just going to be me doing this session, but it's me and Pete today. Welcome to. You all right, Pete? Can you hear me? Okay.
Yeah, I can hear you. Can you hear me, Jim?
Oh, loud and clear, mate. So, welcome everyone. Welcome to this 10th live A-level business revision session for this term, and the last this term, our 10th.
Sad times.
Back again after Christmas with some more exam-focused sessions, and we thought we'd finish on a really core topic, sources of finance. What we've been trying to do with these sessions is go through core topics that really do underpin, the quality and the depth of your answers in A-level business. And this sources of finance, Pete, is as important as any, isn't it?
Yeah, definitely. It underpins lots of core topics, and there's lots of synoptic links that can be made too.
So we've got a variety of activities. Just looking down here, my list, it looks like we've got 9, including a world premiere of Santa's Riddle at the end of the session. So we'll take it alternately, Pete and I. As always, if you're watching live, welcome. Please use the live chat to have a go at the activities. Just type your answers into the live chat. If we cover something you're not sure about, put it in the live chat as well, and we'll try to pick that up by looking at the comments as they come in. We have hundreds and hundreds of students who don't watch live but watch on catch up or replay, so welcome to you too. We can't see your live chat responses, but we do hope that you get a chance to pause the video, give yourself a bit more time. We have a couple of calculations, Pete, don't we? I think, or certainly one, looking at the list here.
Yeah, we do, and that's a nice synoptic link too to year 2 material. So
good stuff. So you may need a calculating implement of some sort. As our guest join us, I think we'll make a start, shall we, Pete, with a little warm-up activity. And I'll do this one. This one's called Altered Vowels, which sounds rather unpleasant. What we've done is we've changed the names of some well-known businesses, and we've changed them by literally altering the vowels. So rather than an E, it might be a U and that kind of stuff. So I think we've got 4 or 5 of these. Quick fire. Who's going to be first? Just to get you warmed up, just to make sure that the live chat is working. Who's going to be first to get these typed into the live chat? Here's the first one there. I'll have a go at reading these out. I don't need to. Amelia's beating me to it. Sports Direct. Amelia was first. You get a shout out if you're first. Sports Direct, that highly ethical corporately ethical business. Sports Direct. Do you buy stuff from Sports Direct, Pete? I bet you do.
Yeah, I have been known to indulge in the past, and obviously they're used to be on the ground of my favourite football team, but they are no more. Yeah.
Okay, yeah. And of course, don't forget EdXL students. The sports retail market is your research theme, or one of the part of your research theme for this year, for 2022, if you're an EdXL student. Here's the next one. Now, this should be familiar to those who always have a go at the big reveal activity. What do you think? This is possibly one of the hardest altered vowels we've ever done. I'm guessing that, I was going to say that Amelia would be first, but Amelia was third. It was the boy who was first in with Apple. Well done. Okay, let's see who is quickest on the button with this one. Amelia was first. Tesla, a supercharged business. And the next one? Actually, it describes their customers, doesn't it? I'm only kidding. There were some people about 15 seconds behind Pete on the live chat. They're still answering Tesla. Amelia was first again. It is Aldi. I bet you shop at Aldi, don't you, Pete?
I do. I like a bargain, Jim. Especially the Christmas characters. Always maximising my utility. There's a nice link to economics for some of us. Yeah.
I can see where we got all these questions from. Here's the last one. This is a hard one. Just a warm-up activity, just to get us going. And Thomas was first. Amelia, literally a nanosecond behind. It is indeed Nissan. I bet you drive a Nissan, don't you, Pete?
No, it was my first car. However, Jim, I did have a Nissan Micra back in the day. Yeah,
I had a Nissan. This is no word of a lie. I had what became Nissan, but previously was called Datsun.
That's an interesting fact. I have heard of those, but the age difference might show slightly, possibly. Not being cheeky or anything, of course.
No. Okay. Well, whilst I muse on that, I'll let you get us going with our first main activity.
Okay, so what we've got here is an activity called Categorise. You've got 60 seconds to separate the key phrases into these 2 categories. Okay, so on the right-hand side of your screen, you can see 8 sources of finance. You need to categorise them into internal sources of finance or external. Can we start the countdown, please, Jim? Almost the halfway point. Answers in the chat window. Well done. So recapping on some core source of finance knowledge there, it's always important to be able to recall these. Lots of people respond in the chat, which is great to see as ever. Let's take a look at the correct answer. And we had Jeff, who was the first person there to contribute with 2 and 8 as being internal sources. And then we had Thomas, sale of assets, retained profit. he said were internal and leasing. Now, I'll come back to leasing in a moment. So excellent responses from everyone there. It's really pleasing to see the engagement. So internal sources of finance, sale of assets. It's usually going to be a non-current asset that might be sold. So it could be a van, for example. Retained profit that's built up over time, and of course, owner's capital, most usually withdrawn from personal savings. On the external side, we're going to have more share capital, particularly if it's in the case of a public limited or a private limited company. Venture capitalists, trade credit, the idea of buying now, paying later. An overdraft, which is more of a short-term source of finance, and finally leasing. Now, as I think a couple of people in the chat window might have thought that leasing was an internal source of finance. It's external because the asset is leased from another company. So common things that are leased might be vans, cars, that sort of thing. Okay. Moving on to some exam gold. In addition to external and internal sources of finance, some exam boards also categorize them into short-term, long-term methods of finance. Okay, so it's important to be aware of that time period. For example, EdXL classify family and friends as a source of finance and loans as a method of finance. It's therefore essential that you're familiar with specific categories for your exam board so that you're demonstrating that precise knowledge and understanding. So always check the spec. It can be your best friend in revision. Okay, I'll now pass you over to Jim.
Yeah, too right about the spec, Pete. Be absolutely clear about what your specification requires you to cover. A question coming in on the live chat, isn't share capital internal? Well, no, share capital really is external, isn't it? Because shareholders are external to the business. They are providing cash finance to the business in return for buying shares. So share capital is seen as raising finance from shares is seen as external. Whereas retained profits, the profit the business earns, it's owned by the shareholders, it's kept within the business, it's internal. Excellent. Right, now we're just going to, obviously with sources of finance, some of the knowledge is relatively straightforward, but some of it is all about context. And often at A-level, you need to form a view as to what's the most appropriate source of finance for a particular situation. So this little activity, again, it's 60 seconds or a minute if you want a bit longer. What we've got here are some situations a business is in, and there are 5 sources of finance options for you to choose, and they match. So for example, you might say that B matches with number 3 or E matches with number 5, whatever. I don't know whether that's right or wrong because I'm going to have a go at the activity as well. So 60 seconds please to match the situation, for example, short-term cash flow problem, with the most relevant source of finance to solve that problem or to finance the issue. Let's start the clock, shall we? Have a go. So 5 situations on the left. Which would be the relevant or the most appropriate source of finance for each of those? Obviously they match individually, so you can't use the same source of finance twice. Not easy, that, is it? Wouldn't it be good, Pete? Just an idea if that music was playing in the background in the exam hall as we were doing our exam questions, just to sort of add to the
Really
atmosphere.
Focused, yeah, tense.
It's amazing what you can do in 60 seconds. As our students who are joining us live are proving on the live stream today, because a familiar face, MJ Amos Vlogs, has come in with his or her selection: A2, B5, C3, D1, E4. Ocean's gone for a slightly different mix: A5, B4, C2, D1, E3. Amelia's gone A2, B5, C3, D1, E4. So Amelia agrees with MJ Amos Vlogs. Shall we have a look? Let's have a look at the suggested solution. Don't forget, with all of these situations, there's more than one option you could do. But what we were trying to do is match the source of finance with the situation. Short-term cash flow, bank overdraft, isn't it? That's what the bank overdraft is there for. It's not a long-term finance, a source of finance for a business. It's all about being able to handle short-term cash flow. You suddenly find you haven't got enough money in the bank to pay the wages at the end of the week. You ring up the bank and say, I need an overdraft, please. And they will say, of course you can. There you go. If your bank manager is friendly. An increase in inventories or stocks held in buffer stock. We're going to increase our buffer stock. Well, ideally, we'd finance that by getting some trade credit from our suppliers, as Pete mentioned a few minutes ago. Now, C looks a bit more long-term, doesn't it? An investment in increased production capacity over 5 years. That's the kind of thing that you get a bank loan for. You might get a 5-year or 10-year loan to finance the investment in the capacity. D, a significant new finance to grow the business. That sounds like you're going to need some capital, some equity capital. And venture capital is a source of share capital, sometimes otherwise known as private equity, venture capital. And lastly, and lots of people got this right in the live chat, providing new cars for the sales force. Well, there's that term that Pete mentioned a few minutes ago, leasing. This is where the leasing company provides the car for you and you pay. You pay the leasing company a certain amount each month. Actually, in most cases, the leasing company retains ownership of the car. Not that need worry us on this activity. There we go. That was excellent, Pete. What do you think? Superb stuff. Should we move on to and it depends on activity, I think.
It depends on, yeah.
Cool.
So I think this could be another debut here. So what does the source or the method of finance that a business chooses depend on? So you've seen some of the methods and the sources that Jim's just described in the previous activity. What we're really trying to do here is build your analysis and your evaluation skills. So, for example, a business might choose a bank loan, but what does choosing that bank loan depend on? So we've got I think this is timed. It could be 60 seconds again, or it might be a little bit shorter.
60 seconds, Pete.
60 seconds, Jim. Okay, let's start the countdown and answers in the chat window when you're ready, folks. Once is already coming in. Excellent. Excellent, folks. Well done. In fact, I couldn't keep up with the speed of the chat window there. So I think Elias was the first one with the amount of money needed. And then MJ Amos continuing with the purpose, willingness to lose some control, whether it's short-term or long-term. We've had a few people mention economic conditions and the nature of the business itself in terms of the ownership type, limited or unlimited liability. So, this stage in the term, tremendous effort here, folks. Let's have a look at what we came up with earlier. So here's our first one, the type of the business involved. So share capital can only be raised by limited companies. Secondly, it also depends on how much finance is needed to be raised. A bank loan is likely to raise significantly more finance than that of family and friends. So we've always got to think about the actual total value of finance that the business needs. And finally, linked to that, I suppose, is what the finance is for. So an overdraft is more suitable to managing seasonal fluctuations in cash flow, or when the business runs into cash flow difficulties, such as a major customer failing to pay on time. It's extremely unlikely that a business would use an overdraft to purchase a non-current asset. The two just don't go hand in hand. That's when you'd have a loan, or possibly even venture capital if we're thinking about expanding the business. So there's 3 it depends on ideas on screen there. The contributions to the chat were absolutely outstanding. This is one of those questions where there's a number of different answers available. It really depends when you choose which one you want to deploy, what the context is in the question that you're addressing.
Superb stuff. Well done, Pete. I totally agree. Amazing answers in the live chat. We've got so many people live with us tonight. It's hard to keep up. Let's see if we can keep the standard up. I'm sure we can. We've got some quick fire MCQs here. Not too hard, these. So again, we'll give you about 10 seconds, 15 seconds on each. Question 1. Which of these statements about a bank loan is correct? Just one of them. Is it an internal source of finance? Is it usually for a fixed term? Is it that it doesn't have to be repaid, or is it it's classed as a fixed asset? What do we think? A, B, C, or D? Nice and straightforward, these. We've got some challenging questions coming up later in this session. Jacob is first in, followed by Mooney, Katie, MJ Amos, Ocean, Elias, and Mrs. Lockhurst, Miss Jeff, Ibrahim. Sorry, I'm musing at the live chat. I can't keep up with the number of people who are typing consistently. Most people going for B. Yeah, it is, isn't it? A bank loan is usually, well, it is for a fixed term. It is for a fixed term. It could be any term. It could be a year, 3 years, 5 years, 20 years. But it's for a fixed term. Good. Question 2. A business needs finance to buy non-current assets such as computers. What's that known as? Buying non-current assets such as computers. Answers coming through again quite quickly. A few more seconds. Looks like most people once again going for option B. And of course, it is B, capital expenditure. Yeah, we make a distinction between capital expenditure, which is typically when you're paying for assets that the business intends to keep and use. Non-current assets, computers, land and buildings, factories, cars, vehicles, that kind of stuff. That's capital expenditure. Expenditure on day-to-day costs, revenue expenditure. And number 3, an overdraft. We've seen this mentioned earlier, is classified as what in the financial statements of a business. This is useful to know, particularly when we come to calculating liquidity ratios or looking at the liquidity situation of a business. Is it A, B, C, or D? A few more seconds. And the answer is indeed, and I would say 95% of you got that right in the live chat, it is C, yeah, a current liability. That means it's a liability, an amount that the business has to pay, but it has to pay typically either on demand, whenever the bank wants it repaying, or within 12 months. Now, an overdraft, a bank overdraft, is a specific situation where the bank, if it wishes, can simply close the overdraft down and require you to repay it. Whereas a bank loan, it can't do that. There are conditions attached to it wanting its money back. So it's a current liability. You might have to repay it. Therefore, it comes under current liabilities when we calculate, for example, the current ratio. Excellent. Right, Pete, back to you now.
Perfectly seamless, that, Jim. So what we've got coming up now is a calculation countdown question. The table below shows some financial data relating to a business. The business is considering increasing its overdraft by 20%. What we'd like you to do is to calculate the current ratio of the business based on this information. So have a think about what Jim's just said. You've got 60 seconds, starting from now. Think about your formula for the current ratio. What you need to do. Awareness of in terms of current asset, current liabilities. Answers in the chat when you can. Okay, I'll just give you a couple more seconds to finish off what we're typing. There's a few answers come through, and I'm just trying to catch up with the chat window. It's gone really, really quick. With liquidity ratios, what we need is an understanding of current assets and current liabilities. Let's recap the formula. So the current ratio looks at how many current assets have we got for every £1 of current liabilities. Now, if we add up the value of all of our current assets, I can see some more answers coming through on screen. Well done. We add up our cash and cash equivalents, inventory and trade receivables. We'll get £200,000 worth of current assets. Now, our overdraft is going to go up by 20%. So we're going to multiply 50,000 by 1.2. That gives us 60,000. So therefore, after the increase in our overdraft, our current liabilities add up to be £100,000. So therefore, our current ratio, £200,000 divided by £100,000, gives us a current ratio of 2 to 1. So for every £2 of current assets, we have £1 of current liabilities, meaning that we can pay those current liabilities as and when they fall due. So in this situation, we've got a business that is liquid in terms of its current assets. And bear in mind that this differs from industry to industry. So sometimes there's no ideal current ratio. In this circumstance, that business wouldn't have any problem paying its debts as they fall due, but be aware of different industry circumstances.
Superb stuff. Right, we have 1, 2, 3 activities left. We're bang on time. Sorry, Pete, you were just going to give us a bit of examples on those calculations, weren't you? Apologies.
Yeah, that's okay, Jim. And I saw quite a few correct answers in the chat window there, as and when people started to sort of, I think, grasp what was happening with the current liability. So when completing calculations, it's really good practice to start with a formula and show you're working out. It gets your mind linked to a frame of reference. That way, even if your final answer is wrong, the examiner can see your thought process and you may be awarded some marks on the basis of showing some evidence of understanding. Okay, it just helps the examiner along.
Yeah,
I'll hand over to you now, Jim. Sorry for the Bauble quiz, I believe.
Indeed, yeah, a bit of a festive spin on a classic activity. If you've been with us on our live streams before, you know we use a thing called the Bubble quiz. And it's like a multiple choice quiz, but there could be more than one right answer, or there could be none. And we've just given it a nice little festive spin here. A couple of questions. These are quite hard, actually, so we're going to take our time with these. It's good to see in the live chat people are focusing very much on sources of finance. So let's have a look at the first question. And don't forget, with the Bauble quiz, all of the answers could be correct. It could be 1, 2, 3 of them correct, or none of them. So you please just use in the live chat there, in particular you, Jacob, let's just put in to the live chat the letters that you believe are correct. Which of these are likely effects of a business raising significant finance from the issue of new share capital? So these are likely effects on the business from raising significant new share capital. Is it A, the amount of retained profit in the business will increase? Is it B, the ownership of the business will be changed? Is it C, the current ratio of the business will fall? Or D, the gearing ratio of the business will fall? So we're making some nice links here to our ratio analysis as well as sources of finance. The two are very closely linked. A few more seconds to have a think about that. What do we think? We've got a mixture of answers here. We've got B and D coming in. B and D coming in again. A and B. A and B. B and D. It looks like everyone's going for B. 1 or 2 people saying A. A few more people saying D. Let's have a look at the answer on this one. And it is indeed B and D. Let's just go through why that is. Well, it's not A. The amount of share capital isn't going to affect the amount of retained profit in the business. The retained profit is what the business makes. The ownership of the business will be changed, there won't there? There'll be some dilution of some sort in terms of the distribution, how those shares are owned and who owns what. So that is a likely effect of raising significant new share capital. And that, for example, would definitely happen if you had venture capital invest into the new share capital into the business. The current ratio wouldn't fall. In fact, the current ratio should rise, shouldn't it? Because the cash would come in from the share capital. That would go into cash or bank balances, and therefore the current ratio should rise. The other side of that transaction is that share capital would increase. That would increase total equity. And we know that total equity plus non-current liabilities is the bottom bit of the gearing ratio. Therefore, the gearing ratio of the business will fall. So B and D is correct. Well done if you got that. One more of these to have a go at. Here's the second one. Which of these statements are true? Could be more than one, of course, or none of them. Is it finance from trade credit will increase if payables days fall? Is it that sole traders can raise finance by issuing shares? Is it that banks charge low interest rates on overdrafts? Is it that the payment of dividends will reduce retained profit? One of those or more of those might be true, or none of them. What do we think? You can see with this activity and also Pete's previous activity how closely sources of finance is linked to those other topics like ratio analysis, liquidity, gearing. Very, very closely linked. A few more seconds. Most people have picked D as being one of the true statements. In fact, most people are saying just D. Let's have a look. And well done if you did that in the live chat or if you watch on replay. Yeah, let's go through them. Finance from trade credit, well, that will decrease, won't it? If payables days falls, that means you're paying your suppliers quicker. It means you've got less finance from trade creditors. Sole traders, well, this goes back to business organisation. Now, it's companies that can issue shares. Sole traders don't have shares. Therefore, they can't raise finance by issuing shares. They could if they turn themselves into a company, but they wouldn't be a sole trader anymore. Bank charges on overdrafts. Well, this is an important thing to remember, that overdrafts, because they are risky from the bank's point of view, they charge a much higher rate of interest than, for example, a bank loan. And yet, D is correct. The payment of dividends will reduce retained profit because that's what dividends are paid out of. You can only pay a dividend to shareholders if you have made profits, if you've got retained profit. So if you pay dividends, it comes out of retained profit. So excellent. You did really well on those. Pete, back to you.
Thanks, Jim. So our penultimate activity here is called On Balance. What we want you to do is start off in the chat window by giving us two benefits of a business issuing new share capital in order to raise finance. Okay, so this really tests your skills of analysis and then subsequently evaluation. So answers in the chat window if you can think of some benefits to a business of issuing new share capital to raise finance. Give you a minute or so, even if it's just a couple of words. No need to write in full sentences or anything like that. Thank you, Amelia. Given some drawbacks as well. MJ Amos, very quick as well. I think you two have definitely been ever present over the past few weeks. It's been great to see. Again, this is one of those questions where you may come up with different answers to us. Don't worry. Generates more capital to invest. No commitment to repayment of loans and interest. A couple more seconds. Okay. Oh, a limitation there. Don't have to be paid back. Excellent. Let's take a look at our benefits. So we'll start off with 2. Again, don't worry if yours is slightly different to ours. It avoids incurring any debt. That also links back to gearing, is what Jim was talking about in the Bauble activity earlier. Okay, that can have an impact on the gearing ratio, and it can help the business raise large amounts of finance, especially if the business is a public limited company. Okay, in an assessment style scenario, we'd obviously have to develop those points and link it really carefully back to the context. Okay, so I'll tip my hat off to you again, all those folks who are contributing to the chat, been really great to see. Now let's balance this out. Okay, what are some of the limitations of issuing new share capital? What's some of the problems? How can we balance out our argument? And then ultimately it would be about coming to a weighted judgment at the end of the day if this was an essay dependent upon your exam board. So we've got quite a few coming in. Loss of control reduces the gearing ratio. Loss of control again. Dilution of ownership. Always makes me think about Dragon's Den or a similar program. Questions like this: limitation will be difficult to get people to invest. Indeed, yeah. There's no guarantee, is there, that these investments will be forthcoming. Payment dividends out of profits if it's been used. Yeah, okay. So as with everything, there's an opportunity cost, isn't there? If that's a very valid point. A couple more seconds to see if anyone else contributes. And indeed, we can link your point there, Amelia, to the sort of the life stage in inverted commas that the business is at. If it's a startup, it's probably going to be quite difficult to actually issue shares first and foremost. Most likely, a startup might be a sole trader, offers that a little bit more flexibility, but it can be a limited company. So let's not rule that one out. Okay, let's take a look at what our limitations are that we picked out before. Dilution of control. I think most of you picked that out in terms of how it's going to affect the ownership structure. That's obviously going to have a number of different knock-on impacts, particularly linking to decision making and longer term strategy maybe. In the case of a limited company, there may still be a limit on how much capital can actually be raised. So in our first benefit, we focused on PLCs in terms of our companies, but in the limitations, we've got to remember there's two forms of company: private limited and public limited. So in the case of a limited company, there might be a limit on capital. Okay, lots and lots of answers have come through in the chat window. As I said before, I can't keep up. Well done with the contributions. And that's it from me. I'm now going to pass you over to Jim for the final activity.
Cheers, Pete. Yes, we've got a world premiere coming up, but
Indeed.
in order to play the final activity, we just need at least 5 people to press that thumbs up button on YouTube, because it's all linked. The algorithm is linked to the final activity. And we won't be able to play this game and finish the session, frankly, until there we go. They're coming in. Just click that little thumbs up button, and that will fire up the next activity.
Almost unlocked. Yeah, I think that's it, isn't it? Yeah.
At least we're there. Excellent.
Yeah.
It's a little activity called Santa's Riddle. And obviously we've partnered, as we often do, with Pixar and Disney for these activities. What we've got are 3 clues. And Santa, hopefully with some sound effects. I'm not sure whether I've got the sound effects working, but you'll certainly see Santa and his reindeer crossing the festive midnight scene there with a clue, 3 clues about a source of finance. Who will be first to answer in the live chat, or if you watch on replay, writing it down? Here we go. Are we ready for the first clue? And as you can see, as often happens with the tale of Rudolph's reindeers, it disappears after a few seconds. So if you've forgotten what the first clue was, maybe the second clue will help you. So I haven't seen a correct answer in the live chat. Here's the third clue. And there we go. And yeah, actually now it's all coming through. It looks like Miliciaya was first, MJ Amos, Vlogs, Amelia, Henry. You're flying in now. That third clue was the clincher. It is sale of assets. One of the internal sources of finance. Don't forget, with sources of finance, most sources of finance are external, but along with retained profits and owner's capital, sale of assets is internal. That's a cracker. Awesome. Love that one.
Great activity.
We put weeks and weeks of development into that. Hopefully you liked it. If you didn't, never mind. There's bound to be something else which you liked. Well done. Great answers, Pete, as always.
Yeah, really impressed with the contributions each and every week.
It's been 10 weeks, hasn't it? It's been a long old term, and we're so impressed by particularly those of you who've been able to join us for several of these sessions on a Tuesday at 4:30, our regular slot. So if you've enjoyed it, as I say, we don't take it for granted. A bit cheekily, we ask for the thumbs up, if only to help the YouTube algorithm, because it needs all the help it can get to suggest this kind of session to other students. And so we always appreciate that. If you watch on replay, you can still do that. Don't forget, if you go to, let's move my finger across, tutortude.net/live, you can catch up on this, all our previous sessions this term, but we've done about 30 now in 2021. I think we've just about covered all the core topics on A-level business for most of the main specs. So you can go through all of those if you want something a little bit different. If you've got mocks coming up and assessments in the next week or two, or maybe just after Christmas, you might find those useful. And certainly from Pete and I and all the rest of the team, we wish you all the best in those, Pete. Not going to be easy, are they?
No, they'll be challenging, but there's loads of material that we've obviously put out there, lots of core knowledge and topic recaps. So go back over the videos, use them, download the PowerPoints, try to use some of the material to develop your own worked answers, and good luck in any mocks and assessments that are coming up.
Too right. Well, we're going to take a break for a few weeks, but we will be back in the new term with some exam-focused sessions. So we might, for example, look at some short answer questions and developing responses and using context. So a little bit, but also some nice activities as well on knowledge retrieval. And in particular, we'll be focusing, once we find out what it is, on the advanced notice content that the exam boards are going to be setting, which will form the basis for most, if not all, the questions that you sit in the summer if you're taking exams in the summer. So we'll try to make sure our sessions pick up that as soon as it's available. But from Pete and I, and of course from Graham and Mike and Susan and all the rest of the team who've joined us on these sessions, in particular to not me, but the rest of the team there for putting these sessions together in the background. Many, many thanks. We wish you a really happy, enjoyable and festive season, Pete. I think that's fair to say, isn't it?
Indeed,
get a chance to put our feet up.
Recharge and relax.
Too right. All the best to you all, and hopefully we'll catch you after the holidays at our next live session. So for now, see you later.
Thanks. Bye, folks.